It's a big week for Bitcoin bulls. Any day now, the Securities and Exchange Commission will decide on whether 14 different money managers are allowed to launch their own spot Bitcoin exchanges traded funds in the US. Now, Bitcoin managed to close out 2023 with an impressive 156% gain, as optimism for a spot Bitcoin ETF fueled the cryptocurrency higher. Our next guest believes the imminent approval could be a large catalyst for Bitcoin's price in 2024 and many more years to come. He joins us now, Sam Callahan, lead analyst at Swan Bitcoin. Thank you for joining us this morning. An exciting week on deck here. So talk about why you're so optimistic about where Bitcoin's price will go from here, given that other spot Bitcoin ETF approvals in other countries haven't seen as much of a surge.
Yeah, thanks for having me. I really appreciate it. So it's certainly an exciting time in Bitcoin. And the reason why the industry is so excited about a spot Bitcoin ETF is it'll give access to millions of investors who currently find it a little bit harder to get exposure to Bitcoin. It'll now be as easy as any other stock or bond to purchase Bitcoin in a traditional brokerage account. But specifically, who this helps the most is large institutions that manage trillions of dollars of wealth. Think financial advisors, broker-dealers, endowments, pension funds. Right now, it's not that they don't want to get exposure to Bitcoin. They can't because of regulatory requirements that restrict them from buying spot Bitcoin. But a Bitcoin ETF changes that because it's just a security like any other stock or bond. So it fits into their existing regulatory frameworks. And so now what we could potentially see is these large institutions investing tens of billions of dollars into these spot Bitcoin ETFs, which will drive demand for the underlying Bitcoin. When you couple that with Bitcoin supply, which is fixed at 21 million, it's not really difficult to see why the industry is excited about the potential moving forward.
Because some people are wondering, obviously we didn't see spot Bitcoin ETF, we didn't see the price sort of skyrocket in other countries that have adopted it. But as you look at some of the names that have amended their S1 forms in the run up to this, obviously BlackRock, ARK Invest 21 shares, VanEck, Wisdom Tree, Invesco, Fidelity, among some. What does that tell us then about sort of these last minute changes? What does that tell us about the preparedness here for some of these big investment banks?
Well, these are large players. These are the largest financial asset managers in the world. BlackRock, Fidelity, they're just crossing their I's and crossing their T's and dotting their I's, getting everything in order with the SEC to make sure that everything's in order for them to launch these spot Bitcoin ETFs. And I think when you compare other ETFs around the world, like at the Toronto Stock Exchange, that was kind of launched at the top of the bull market, and then you saw a decline in the price. So just in terms of the cycle, when these are launching today, we're coming out of the bear market. We have a lot of momentum coming out of 2023. We have more regulatory clarity in terms of the broader crypto markets. And it's really a constructive time for Bitcoin when you look at other developments, such as the FASB accounting rule changes that are going to allow corporations to more easily buy Bitcoin on there as a treasury reserve asset. When you look at the broader macro picture of the Fed expected to cut rates, you can see why there's going to be a lot of demand for Bitcoin. And just the education levels compared to 2021 and 2023 today, it's very different. These institutions now better understand this new technology, and they understand the value proposition of Bitcoin. And so that's why I think you're going to see a lot more inflows than maybe what we saw in these older ETFs that launched abroad.
And we definitely see, obviously, more expertise coming to the table from institutional investors. Is that the same though for your regular retail investor here? What should they be aware of as they're sort of perhaps getting caught up in the hype, wondering if this is going to be the big catalyst of where Bitcoin is going to go from here?
Well, I think what retail investors need to understand is that, Bitcoin might be volatile, but it is the best performing asset 7 of the last 10 years and 10 of the last 13 years. And so it's very important to view Bitcoin as a long-term savings and as a way to protect their wealth from debasement, as well as to hedge their portfolio, because Bitcoin moves in a way that's uncorrelated to other stocks and bonds. So a lot of these institutional investors are now, you're hearing recommendations of a 1% allocation, a 2% allocation, or a 5% allocation into Bitcoin as a way to diversify risk of a portfolio and improve the performance of an overall portfolio. And so I think it's important for investors to not just buy Bitcoin, but to learn about what they're buying. And what they're buying is a scarce digital store of value that allows themselves to protect their wealth over long periods of time, as well as provide uncorrelated returns that help reduce the risk of an overall portfolio.
So as we're looking at Bitcoin currently sitting at above 45,000 here, what does that road for Bitcoin look like for the rest of the year? How high do you expect it to go between what we're seeing with spot Bitcoin ETF potential approvals, as well as the Bitcoin halving that's supposed to be taking place in April?
Yeah, there's a lot of potential catalysts for Bitcoin's price. And what you mentioned basically is on the demand side, we have new on-ramps like the spot Bitcoin ETF. Like I mentioned, that's going to make it more accessible than ever before for retail investors as well as institutions to buy Bitcoin. And at the same time, you have on the supply side, the halving event. And that's where every 4 years, the amount of Bitcoin that gets issued gets cut in half. So it basically makes the available Bitcoin more scarce. And so you have two dynamics: increased demand, and it's getting scarce at the same time. And that is really constructive for the price moving forward. And if you look at past cycles where there's been a halving, Bitcoin's price tends to run after these halving events. And when you couple that with some of these more constructive demand factors, you can see why people are really constructive about the price moving forward. And there's been a lot of, I try to stay away from like specific price predictions. But if you look at the historical performance of Bitcoin, the years after these halving events, and you combine that with the increased institutional adoption, and Bitcoin could reach new heights into the 6-digit figures in 2024 and beyond.
And Sam, I have to ask you, because obviously when it comes to stock markets overall, people think of the Oracle of Omaha, you think of Warren Buffett. Who would be that for Bitcoin? I'm watching some of the moves by Michael Saylor of MicroStrategy here, selling some stock here, buying a lot of Bitcoin here. What is the move here for some of these big name investors and how they're approaching this?
Well, I do have to applaud Michael Saylor. I think what he's doing is brilliant in terms of he's looking at his equity. He's saying it's overvalued, so he's issuing more and then turning around and buying a scarce digital store of value with it and put it into as a treasury reserve asset. And I think it's a brilliant strategy. And I think what these large high net worth individuals or institutions have to consider is what I mentioned before, is that a little bit of Bitcoin goes a long way in terms of improving the performance of your overall portfolio. And you have to consider how to hedge against certain risks, like counterparty risk. When you look at the bank failures that happened in the spring, you might want to own a little bit of your wealth in something that you own yourself, that you can actually take ownership with. You don't have to hold it with any kind of trusted third party. That also protects yourself in a more structurally high inflationary environment. In an inflationary environment, you want to own hard, scarce assets. And so that's why you're seeing financial advisors and other institutions, institutional investors like pension funds, start to allocate towards alternative assets that are hard and scarce to protect their wealth against inflation. And so if we are entering this period of structurally higher inflation, it's hard, scarce assets that you want to own. And there's nothing more scarce than Bitcoin. And so I think a small amount goes a long way, and you want to own hard, scarce assets in an inflationary environment. And that's why Bitcoin is really attractive to all investors.
We'll certainly be tracking its performance. Excited to see where it goes from here. Sam Callahan, Swan Bitcoin lead analyst. Thank you for your time this morning.
Thank you.